Alright, good afternoon everyone. Today is Wednesday, the 11th day of March 2026. Couple of things right from the start. I'm not going to be doing a webinar next week. I'm going on vacation. I'll have my laptop with me so I can still answer questions and stuff like that, but I am going to be going on vacation next week. Also, if you haven't taken a trial with us and you want to take a trial, go here to, oops, nope, not that one. This one. Go to tv-trades.ai, tvtrades.ai. On this page, there's a couple of things. One, if you scroll down here, this is the latest. Hey, does that look 3D to you guys? That looks 3D to me. It's supposed to be 3D, but sometimes it looks like it and sometimes it doesn't. Anyway, this is where the playlist is on YouTube. So this webinar that we're recording right now is going to be out here at the end of the day. You can view the full list. If you want to see any of the webinars that I've ever done and put on YouTube, you can click on this and it'll bring you right here to this playlist of all the webinars that I've done. And you can search in here for different things if you want. Like if you're looking for something that has to do with, I don't know, some different kind of bar type or something like that I did way back in 2 years ago. You can go in there and find it. Again, that is straight from the tv-trades.ai page. Alright, and this webinar here, you'll be able to watch it here at the end of the day today. You'll also get an email that has a link to it. All that stuff will be coming your way in the future. If you haven't taken a free trial, just go here, click start to free trial, and bring you down here to the bottom. $25 a week, $90 a month, $97 a year, all that stuff. Okay. Let's see. I wanted to show you that and that. Hey, I got a new options. I'm going to create a new options page. tvtoptions.ai is going to be a new options page, and I'm going to have where I can put just the options stuff, so there isn't so much of a mix of the options and futures. Alright, because the options, I think it's going to take on a life of its own, and you'll be able to see all that stuff there. Speaking of the option stuff, I just finished right before the meeting started the info for tomorrow and the info for yesterday. I haven't finished. I don't know what the actual results are for last night's picks, but these are last night's picks. Overall, they were up 19.43% average. We were down a little bit on that one. The PFE, that might be up right now. I don't know. But BAC was up 50%. Home Depot was up 92%. 3M was up 57%, and these couple of guys were down a little bit. Well, that wasn't a little bit. That was down a lot. But remember, these don't expire until Friday, so you have until Friday for those things to get into the money. It is Wednesday, so starting tomorrow, we'll be doing next Friday's options. I'll put that in here too. Starting tomorrow, we'll be doing next Friday's options. Okay, but this is what I got going for tomorrow so far, and it's probably going to pretty much be what it is. But these numbers right here are going to change. These will be the same, but these numbers here are going to change because they'll be next Friday's expiration. Okay, so when I go back over that in a little while, I'll change those numbers around. Alright, like I said, the options is taking on its own life, really. There is a TV Trades Options Telegram channel. If you're a subscriber, you get access to that Telegram channel. If you're not a subscriber, you get access to it while you're on the trial. If you don't have access to it right now and you're a subscriber, just send me an email at support@targetviewtrades.com, and just put options channel in the subject line. Okay. Yes, that's what I was thinking. This is going to be its own thing. I bought the new domain and everything like that, tvtoptions.ai. So I'll build that out in the coming weeks. Alright, I have so much on my plate right now, and I'm going on vacation for a week. And I'm going on vacation again next week too, but next week's not going to cause any disruption in the webinars for us. So let's get over here and look at a couple of things. Okay. The blue arrow. Now the blue arrow works in pretty much the same rules as the black arrow. You want to do it outside the band, preferably outside the band. You can do it inside the band just a hair if you want. And what it does is gets you in a full bar before the black arrow most of the time. Sometimes it'll get you in when there's no black arrow at all, when there's no gray arrow. Now let me show you what creates this blue arrow, alright? So you can have kind of a lead up to it, because I didn't create anything that lets you know that a blue arrow is coming. Okay? How often are the option links gets updated? The stuff in here, you mean? Wayne, you mean the, you're talking about the one on this other page. Hang on, this one right here. This page. Let's see, I'm not even sure what it's got on. Oops, wait a minute. Oh wow, that's not what I meant. Hang on. I know the one you're talking about. You're talking about the shared options page. This one right here, I think. Oops, hang on, let me cancel on that. I don't want to do that. Let's go here and we'll open up another one of these and go to supercharts, and this is something new that I'm going to get into with you guys in a few minutes. But the one that you're talking about, Wayne, I believe is this one. It's either, is it this one right here? This updates automatically, so all you have to do is refresh it. Okay, just refresh it. Yeah, I don't even think you have to do that. It still updates automatically. These bars are they're time-based bars, right? It's a day bar. So this stuff is going to come and go. Things are going to pop up. See how they're adjusting right now? Things are already adjusting all by themselves. So at the end of the session, these things are going to adjust some more. Now there's another one that I created because I have another formula that I started to use. It's this one right here. I don't think I shared this out with anybody. I guess I did. I might have. But this scans things again using the same stuff that this does, plus a little bit more to filter things out a little bit. Okay, so this is what I've got going on right now to give you guys the option signals. Now you guys all have access. I think it's to this one. See, yeah, I think it's to this one right here. No, but it's not that one. That's the 0DT one. You have access to this guy, multi-trend options. Yeah, 0W. That's the one that I put out here in the Telegram channel. That's right here in the Telegram channel. Let me pin this. Oh, it is right there. It's already pinned. You just have to click on it. Okay, let me unpin that and pin this. Okay, so that is pinned up there. So you can just go straight to that, and that will give you this right here. And with this, you actually have to go and check these symbols, all right, to see if you have the cross. That is the shared one. Yep, Wayne. To see if you have the cross, but this link is going to get changed. That's why I just pinned it here, but I'm going to change it. Oops, not there. Yeah, I guess I am. That's there. I am going to change it to something different. Probably weekly, maybe more than weekly, but you'll be able to find it in the pinned area right here. Okay. Now I started using a different formula. That's this one right here. So when this loads up, it's going to scan everything, and when it loads up, you'll see. With this, you don't have to go back and check to make sure you have the cross, right? With this other formula that I'm using, and a lot of times they overlap. They'll have the same symbols, but you don't have to go back and check to see if they have the cross. All right. Now you guys don't have that one yet, but eventually I'm gonna change this one so that you'll be able to go and use this one, and I will pin it in the TV Trades Options channel. Alright, so all you guys that are in the TV Trades Options channel, you'll be able to go there and get it from there. And yeah, the other thing that I was going to show you guys, I have this new thing that I'm just starting to check into right now. It's called the 0DTE index. So some of you guys, I mean, if you trade options, you probably realize what a 0DTE means. It's 0 days to expiration. That means you buy the option on the day it expires. So you're obviously looking for a big jump. As soon as you buy it, you're expecting it to move. And that works well with the indexes. Like this is the Russell. ETF. This is the NQ ETF, and this is the ES ETF. And it works well with the ETFs, but you just got to be right, and it's got to have the symbol. I mean, it's got to have, the signal's got to be right. It's got to be coordinated well. So you can do it on the daily. I have it here on a daily, a 6 hour, a 3 hour, a 2 hour, and a 1 hour time frame, and it gives out the signals. Now there are some stock signals, some stock symbols as well that expire every other day, Monday, Wednesday, Friday, and those guys, they're like Tesla, Apple, Amazon, Google. There's 3 of them, but there's a few more of them in there. Meta. They also have Nvidia. You can see right there. They also have expiration dates. Well, they expire 3 days a week. Where the ETF index is right there. They expire daily, so you can buy daily options and do DT daily options on these guys, and Monday, Wednesday, Friday options on the other 9 symbols that there are. Okay, that is, yeah, there's definitely something to it. All right, now I'm still. Jessica just said she's working with those this week, and they're tricky, but they are a thing, and they are a thing. There's money to be made in it, and if you look at, like, if I just look at here, look at QQQ for today. Okay, and I'll do either calls or puts. It doesn't really matter. Here, this is what I was interested in right here. The QQQ 606 call that expires today had a range of 97 cents to $6.86 today. Okay, now last trade was at 139. So that's for the calls. The puts are probably the other way. The last trade on the puts was probably, well, let me just flip it and I'll tell you. There. Okay, so I'll bring that over and show you in just a second. But you see, it's got a huge range in the day. So if you get into that at the right time in the range, then you're going to make some money. And that's what I'm trying to create. I'm trying to create a product where you can get into that at the right time in the range. And it's going to be early in the morning. And see, here's the puts. The same option, just with puts. It had a range of 43 cents to $2.21 on the put side. The last was at 62 cents. So if you got in at the lowest place and you got out at 62 cents, you were the last one to get out at 62 cents, you still got 50%. But there's a lot of money to be made there. I just have to figure out how to best present it to you. That's why I have all these different time frames, because the first thing in the morning, this is going to be 9:30 first thing in the morning. This is going to be 9:30 first thing in the morning. You can't really do the close at night with these because there's a huge difference between the close at night and the open in the morning. And I'll show you what that looks like. I'm not really getting too far off topic here, I don't think. But let me just show you the difference between a close at night. I think I did this. Yeah, these were last night. So this, I thought I wrote down what they were when I did it. Maybe I didn't do it last night. That's all today. Hold it. There it is. I did do it last night. Here, look at this one right here, for instance. This is the IWM 251 call, and this was at 5:30. It was this morning, 5:32 a.m. this morning, 5:32 a.m. And you see, it's the 251 call. This is pre-market, so the last on that was 3:53. Okay, so it was pretty much the mid of that. And if we fast forward, this is the 251 call. So if we fast forward to the 251 call, here it is, a 251 call. This is a 251 call at 9:36 after the open. 160. I don't have the last in there, but you can see the spread. It was 165 to 167. Remember what the spread was at the close? This one. Let's put 334 to 407 was at the close. That was before the close, and this is in the morning. So these things you're going to wait until the morning to get into it. Okay. I mean, you could, that spread, it could work the other way around too, but it's well, let's just go back to that again for a second. So this was a 251. Let's go to the QQQ. QQQ with the open. What time is this? This is 9:37, and this is the QQQ. What did I just look at? The put a second ago. So the QQQ with the open, you could have bought it for $1, okay, at the open. And what I just showed you a minute ago, right here, was the range of the QQQ. So it went from $1 at the open up to $2.21 at some point during the day. This was the QQQ put, the 606 QQQ put. I think, is it the same thing? Yeah, 606 QQQ put. So it made 100% gain during the day, and now it's back down to 62 cents was where it was. All right. So I just want to point out, this is another thing that I'm working on. It's going to take a little while to get this together and figure out the best time to do all the right things. But I'm looking at all these different time frames, and it's not just for this. You know, the stuff that we normally do that expires on Fridays, you can do 0DTE on Fridays for those things if you want to. Now, that stuff will be really handy if you have like earnings coming out on a Friday for something, and you have the 0DTE for the earnings day on a Friday. That's when that'll be useful. But I know I'm throwing, if you guys don't know options, you're not interested in options, and I'm throwing a whole bunch of information at you that is really going to go over your head. Don't leave yet, because I'm going to get into the future stuff, and I'm going to start trading here, okay? So don't leave while I'm going over all the option stuff. It's just a new thing, all right? Is good after that 9:30 time? Well, hell, just look at the price. You know, if the price goes crazy, then you might have missed the boat on it. The question was, if after the open, how long should I wait, or how long is okay? But after the open, like you can see I took these screenshots right here. Was at 9:35 this morning when I sat down to open the room up this morning. It took me an extra 7 minutes to get the room open because I was taking these screenshots right at the beginning. All right. But you can see, there was a $1 difference between, actually a $2 difference, I think, between buying them at the close of the market and buying them at the open of the market. These are not the same thing. These are 0DTE. You buy them the day that they're going to expire. So you don't want to buy them the day before. Okay. And you can see that this is just an example. This went up 100% during the day. And that's just one example. What I was just saying is, if those, all the other ones that we look at, all these guys in here that we look at, we're buying for, well, Monday, Tuesday, Wednesday, we buy for this Friday's expiration. But then Thursday, Friday, we buy for next Friday's expiration. But if you can do the 0DTE stuff, I know this is confusing if you don't know if you don't know what you're doing with options, but if you can do the 0DTE stuff, you want to do it on expiration day. So all this stuff that we're looking at for this Friday's expiration, on Friday morning, when you look at this scanner on Friday morning, because you all have access to it, on Friday morning, whatever is in the scanner at 9:30 in the morning, if you want to do 0DTE on those options on that day, then that's the day that they should reverse. Okay. And you got to be in and out of those things quick. If they go up 20%, 50% by noon, you want to be out of that. You don't want to hold it. You don't want to hold it throughout the day, because probably after 11 o'clock, the value is going to drop dramatically, quickly and dramatically. So what I was saying is, if on these things, if you happen to have something that has earnings on a Friday, like you have the E down here on whatever this is, this was Micron. If you have the E on a particular Friday morning, just pay attention to that, because those are days that those things are going to fly. All right, so that was a lot of information. 22 minutes of information. Now let's get back in here. Back to this. This is so much. Feels like more organized for me right now. Yes, huge time decay afternoon, Jeff. Alright, so as far as the trading goes, you see the ES right now. I have the ES on a 19 range because the blue arrows aren't really designed for smaller time frames. They work there, but they're really designed for a larger time frame. So I put the ES on a 19 range for this session, okay, for what we're doing in here right now. And I don't have the mid bands on, and I don't have all the bar colors on that go with the mid bands right now, because I really want to focus on the blue arrows right now and talk to you guys a little bit about the blue arrows. I have about 100 different things that I'm working on, and the blue arrows are at a state right now where they will be helpful to you, but they're not a finished product yet. Okay, but they're at a state, I mean, you can see, right here you would get in a full bar before that black arrow right there. So you would have bought at the open of the black arrow instead of at the close of the black arrow. Now the black arrow still worked, but you would have had a whole bar right there, 39 ticks, before you would have even normally entered that. And so you would have been getting out before you had this pullback in here. So like this one over here, that one, well, it was kind of on the mid band. I was trying to program it so it would not paint any blue arrows that were more than 10% over the band, but I ran out of time. I didn't have time to figure out the code for that. But I was trying. I'll figure it out eventually. But I kind of want to get them so they're outside the band like this. You want to take the blue arrows that are outside the band like the black arrows outside the band. But sometimes the blue arrows, if it's just the head of the arrow that's touching the band, those work out okay too. Most of the time. Okay. Now, for those of you guys who don't know, the synthetic divergence trade is when the blue line crosses, the red line crosses the blue and comes out of the cover, kind of like it is right here on the ES. Or, really what I like to see is something like this right here, where it crosses the blue like that, comes out of the cover, and then you sell the open to the next bar. Okay, you're going in the other direction, crosses the corner of the blue like that, comes out of the cover, and you buy the open to the next bar. That's synthetic divergence trade, and that trade's been working really well for a lot of people, including myself. Now, it does produce a lot of trades, and I know, I've had the blue arrow stuff. Some of you guys who are in here right now, asked about it last week, and I put you in the test group, and you didn't reply to me all week, so you didn't get to test it all week. But there are other guys that were in the test group that did test it all week, and they were doing really well with it, with the blue arrows. 80 to 90% success with them. And I did make it for a larger time frame. We had a lady on trial earlier this week who, yes, I see that lady is here, earlier this week, who was saying she just wanted to do larger, well, just want to do a few trades earlier in the morning. And to that I say just go to a larger time frame. Okay, so if you go to 100 range in Q like this, and you only want to trade the first hour, we'll start here from 9:30 to 10:30, between here and here. Okay, so you're looking for the opportunities. Well, first, the synthetic divergence opportunities. So let's turn off this altogether. Okay, right here, the red crossing the blue outside the, well, you really want the blue to be inside the cover, but it's right there. It's really not the ideal trade. You want it to be like this right here. This is the ideal trade. That's the steeple. That's an inverted one, but right here you would buy the open of the next bar right there. Buy the open of that bar. This is 100 range NQ. If you trade in the micros, that's $50. All right. If you trade in the regular contract, it's $500 right there. That's one trade. Right. The next one would have been right here. Without even looking at price. The next one would have been right here. Okay. So you would have sold that. You would have bought that. Sold that. In the first hour. Well, you guys just had those two synthetic ones in the first hour. So there's 100 ticks there and 100 ticks there. Right. This is where you sold that right there, and you would have bought that right there. So that is it. What if the blue arrow conflicts with the synthetic divergence? You got to take your pick. The the synthetic divergence, it works. The blue arrow works with the synthetic divergence most of the time, but not every time. There's a trade right now on the ES. Sorry, there was a trade on the ES. Synthetic divergence trade right here on the ES. I'm short. Here it is, right here. Okay, so my stop is at +5 on that, and I'm going to go to +12 on that. Okay, that was a synthetic divergence short from right here. It was actually right up in here. Ow! I just ran my toe over with my chair. Okay, let me just write that down, and I'll get back to it in a minute. But the question was, what if the blue arrow conflicts with the synthetic divergence? You saw that I took all the arrows off right there on that one, right, Scott? That's so we just look at synthetic divergence. Okay, so you don't really have to think about that. I have stuff. I have some really, really good stuff that I'm working on. You know, when I created the synthetic divergence thing, you know, Pandora's box has kind of a negative connotation to it, but it opened up a box full of, like, I think, just opportunity. But it opened up this box full of opportunity that I haven't explored all of yet. And so I'm still creating things based just upon the data that I was able to create using this out of the data that I created from within the range bars. And there's still a ton going on. And I have other things, like if I turn this on right now. Okay. I see the red arrows are something that Jim C., who's, you know, one of our subscribers, who's really a long time guy with all the stuff that I've been doing. He's been around since over 12 years now. He was actually in the Kansas City meeting that I did in 2014. The Kansas City seminar when I used to do seminars. But anyway, the red arrows are a creation that he had come up with, and I programmed it just so we could see what it looks like in real time. But the yellow arrows are there to counter the black arrows. Alright, if I put this back on, they're to tell you which black arrows you shouldn't take. You see. So I got a million things I'm working on all at once. Let's take that back off and this back off. And down here you'll see in here that black line and this green line, they're both derived from the synthetic divergence numbers. And that's going to play into other things that you'll see coming up. On the NQ, what range would I use in the ES in the morning? If you're going to use something larger and you only want to take a few trades, the 19 is going to be pretty good, Wayne. You got to do a multiple of 4 minus 1. So you do like a 19 or a 23 or 27, something like that. White Bar Jim, yep, same guy, Jeff. Yeah, he was at that seminar that you were at. He was sitting, I think, John was the blonde guy that was sitting toward the right, if I remember right. Yeah, White Bar Jim. Yeah, he took some time off for a while there. I think like 5 years in between. Well, he didn't communicate with me anyway, but he got married and all that other stuff too in there. 5 years. Well, actually, I think he got married fairly recently. Yeah. But he's back. And yeah, Jeff, you were at that seminar. A couple of you guys, I think, were at that seminar. There's only 10 people at that seminar. I limited it to 10. Yeah, you were there. I think there's 3 people in here right now that were at that seminar. Jada was there. Yeah, Jada was there. She's not in here right now, though. She's got her hands full. She's got her hands full right now. But she's like right over there. Yeah, she was in the back row too. She was quiet. She was my helper. Anyway, the synthetic divergence stuff. I want to say, you should just choose something, something that's working for you. If you have confidence in this synthetic divergence stuff, choose that. If you're going to be doing the arrows, then you're going to want the blue arrows. If you're going to do the black arrows, do the black arrows, but you're going to want the blue arrows because they're gonna happen before the black arrows most of the time. Not every time, but most of the time they'll happen before the black arrows, and they take the synthetic divergence stuff into account, where the black arrows do not. All right. However, this guy down here that runs opposite the black arrows does take the synthetic divergence into account. The yellow ones. Now you're not going to see those yellow things. You just won't see the black arrow when it runs opposite a yellow one like that. When I'm done, you just won't have the black arrows. Yeah. I don't know if I got it in me anymore to do seminars like that. Back then I was traveling all the time. Now it's a workout for me to just when I'm going to be leaving to travel on Monday. And that's just like a small airport, from small airport to small airport, from Concord to Punta Gorda on Monday. I can't believe how I used to do that back then. I guess I was in a fog most of the time, and I was 12 years younger. But anyway, back to this stuff. So I can leave everything on here. We can take the trades as they come, both types of trades. But I would suggest to you, and Wayne, if you want to go to a larger time frame, I'm using a 19 range in here right now, and that, with the volatility that we've been having with ES lately, that would be okay. But well, some days it's just not. You have like one trade a day or something like that. 19. That's 5 points you're gonna be looking for on the ES, and that used to be a full day's worth of range. So. It's 305, and so far I've just taken the one trade right on the ES. So this is how I do all the calculations for the options. Today is 311, so today on the ES, I think the ES is this one right here, right? So we got 12 ticks on that one. Alright, and one trade, 0 stops so far. Alright, so that's where we are right now. Today's session. Now get back in here and see if we have anything else. This right here, you could have shorted that. It didn't really hit the corner that well right there. I like to actually touch the corner on the cross. This is not a cross right here on the corner, so the synthetic divergence did not work on that one. But this didn't go all the way down to the bottom of the cover right there, so I'm not going to think of a long trade right here. That's not really a synthetic divergence trade. Okay. Yeah, back then. Gosh, Jake was 9 years old. It's come a long way. It's funny now that he's a homeowner and he sees how much things cost. He's texting me today, asking me about different levels of mulch. I never knew it cost so much. So I buy it a pallet at a time. Do you treat the blue arrow as a gray or a black arrow? Yes. Yep. Well, I mean, you don't have to have the gray or the black arrows on there, Mark. You can get rid of them both. To take them off, oops, yeah, that's right. To take them off, you would get rid of them right here. Just undo that one and undo that one, and then you only have blue arrows. Okay, but you want to do the blue arrows that are outside the bands, like that, like that. I guess both of these are outside the band too. That's unusual. You have two of them like that in a row. It didn't work out. Completely didn't work out. But let's go back to a 39 range on this so we have more trades. Okay. Can I briefly review the trigger? Sure, I'll do it again. What you're looking for down, well, first let me start out with just putting a trigger on, okay? You guys don't have all this stuff. This is your trigger. Oops. It thinks I need to upgrade. Hang on, I need to save this and refresh it. Because it's not recognizing me as logged in right now. Okay. So now, this is the trigger that you guys have. So if I put that on, and this is what it looks like by default. Okay, now it looks like that until you put the password in and all that stuff. So once you put the password in, then it looks like this. Oops. Doesn't look like that. Hang on. Well, once you put the password in, that's interesting. I didn't realize I had that bug in there. Okay, once you put the password in and you hit Synthetic Divergence, this is what it looks like. Alright, so this blue step line right here is actually this line. It's just a step line instead of this line. You see when it goes into the oversold there, everything should be roughly the same. If I were to convert this right here, this is on this side, and if I were to convert that is this one right here to a step line, it should be the same as the other one. Okay. See, all the movement is the same between them. So they're the same line. It's just for the divergence trades, the illusion that it gives you is that it's crossing the blue line right there where it crosses the corner, and that matters. So once you put in the password and you click on Synthetic Divergence, you click this thing right here, then that actually changes everything. You know, I think when I did that, it undoes that. That's what it looks like. Once you put this on and you put in the password, that's what it looks like. Okay, it looks like that when you put in the password. And then if you click on Synthetic Divergence right here, it changes it all. It populates the cover, it changes it to a step line, it takes off the bar color, because originally the bar color was all blue. So it does all that for you now just by clicking on that Synthetic Divergence checkbox right there. Okay. Then you're just looking for the opportunities within it. Alright, like right here, you know, we don't have anything right now, but we did a minute ago, I think. Yeah, this would have been an opportunity to short right in here a minute ago. It wouldn't have worked out very well, but it would have been an opportunity to short right in there. And that didn't actually hit the corner, so you wouldn't have taken a long right there. This didn't make it all the way into the oversold, so we couldn't do anything there. This was the short that I took a few minutes ago. And right now, this right here is actually a long on the NQ. Now obviously that's not working out very well right now. I could jump into it right now, right here, and take the trade from right here. I actually just did. Okay, I just jumped on this from right here. It's a pullback, but this was the actual entry. Was the open of this bar right here was the actual entry. Now I know this doesn't correspond with anything else that's going on in here. And this is on the NQ. It's got a 36 tick stop. 36 tick stop. Okay, on my 39 range has a 36 tick stop with a 50 tick target. Okay, and so we'll see how this works out. It might stop me out. It looks like it's going to stop me out, but who knows? We'll let it go. Let it do its thing. Put that window on top and stick it right over here. And the ES is still not a trade. I went to the 19 range on the ES because I wanted to show the blue arrows on the 19 range. Did we stop out? We just did stop out. I wanted to show the blue arrows on the 19 range ES because they weren't really made for the shorter time frame. But we haven't had a trade in there. So let me put that stop out in here. That was minus 36 on the NQ. That becomes a 2, and that becomes a 1. Now, we have a lot of trading left to do in this session. It's 3:12. We still have 45 minutes of trading left, so I'm not concerned at all about whether we'll get back into profit on this. Craig, what setting do you need to get the blue arrow to display? Well, you gotta remove your TV trades range trigger. I'm sorry, remove your swing bands. Refresh. Let me do it for you, okay. First, just refresh your charts like that. Just refresh like that. And then remove your swing bands and go in here and add the new TVT swing bands. And it'll be on by default, okay. The NQ has a 50 tick target, Sharon, a 36 stop loss. The 50 tick target. That was a 36 stop that I just got right there. Okay. Alright. So now we wait. See, I got some really cool stuff that I'm creating in here, and you know, I guess I can still see. Do we have synthetic divergence or not? If I blow this up, this black one particularly is going to be really useful. The green one's not as not as much of a big deal yet from what I can see, but I just created that green one last night to see if it could play a role in helping me. I want to actually filter out the blue arrows that aren't working well, is what I was trying to do. And I ended up finding something to filter the black arrows in the middle of it all. Okay, so this right here on the NQ, that's synthetic divergence right there. That's a short. Okay, so from the open of the bar right there was a spot shorted at 927. And let's put that one on for right now, and we'll bring this back down like that so it looks normal. Okay, now I did actually short that, and I think it just gave me 10 ticks in profit. Hang on. I didn't have a very good entry on it. That's why I think I got 10 ticks in profit. My stop goes to break even plus 10 automatically. Automatically after 16 ticks in profit. And here, it didn't give me the full 50 ticks. It gave me, it looks like, 8 ticks. Okay. So, go and put that in. This is now minus 28. 3 trades. Okay. So we're positive again. I wasn't concerned. And it's actually got a long trade here. Now, this whole flipping back and forth thing from long to short and long to short and long to short, you can do it. That's why I kind of like a larger time frame, because you know, you go 100 ticks at a time one way or the other. Like this long right here, I'm at plus 10 on that right now, and that's plus 30, I think. Is that right? 46 to 23. I think that was 32. Anyway, well, it's as simple as that. It just goes back and forth and back and forth. So that, I think, was 32. That puts us at 4 now. And 4 there. Okay. Wait. That wasn't 32, it was 28. Let me go fix that. That puts 0 there. The fill didn't happen where I thought it happened. Well, I'm not putting them in right now, Keith, because I'm trying to limit the stuff, you know, the scope of everything that I'm doing right here. So that was 7, not 8. It slipped me 4 ticks. But I'm trying to limit the scope of what we're doing here. The question was, we don't need the mid-bands. You can use the mid-bands if you want to trade with the trend. Okay, or if you just want to use them to define the trend. You know, you can have the mid-bands in there. If you want to have the mid-bands, you know, just so you could say, alright, if it's red, I'm only going to take shorts. I'm not going to take, you know, shorts like right now. I'm not going to take synthetic divergent shorts. If the mid bands are red, I'm not going to take synthetic divergent shorts. Okay. A reverse position. They do have one, Kurt. I didn't use it. I didn't create it for everybody to use. But there is one in there. The NQ red line didn't touch the white line below. It doesn't have to touch the white line. It's just got to get out of the blue. Hell, it doesn't have to go all the way to the overbought or oversold. It's just got to basically get out of the blue. And if it gets, to the edge of the blue like that, I consider that out. Okay, out of the blue, out of the cover is what it is. Or Jessica calls it the blanket. The blanket. That Michael Jackson's kid's name, blanket. Something like that. It's kind of weird. Alright, so we didn't end up with a trade over here on the ES. Okay. Now, this was another trade here on the NQ. Right here. Okay. It's not looking so good, but it was another trade. I think I got a pretty good fill on that. 32.75. I'm only off by 4 ticks on that. That's not too bad. But it was right here, where it went through the blue, out of the blue. Synthetic Divergence short right there. Now, it's possible it's going to stop me out. I don't know. But it was a valid trade. So I took it. And we don't have a trade over here. So I'm just waiting now. And we don't have any kind of an arrow trade because we're in the middle of everything right here. So we just have this Synthetic Divergence. I think it's going to work out. I think it's going to get down to this lower band right here. It's going to work out. This right here, if you look at the leg length, this is a 50% retracement of this leg down right here. So if it gets rejected right here, it should go all the way down here, all the way down to here, actually. If it gets rejected here. If not, then it's going to go to the upper band. It's going to stop me out, and we'll end up with long trades. Either way. Works for me. But I think it's going to work out. Give me 50 ticks at least. Or 10. If it ends up putting me to plus 10, it comes back and hits me at 10. But you see what I'm talking about as far as the price action goes? I'm going to slide this off to the side for a second so we're not looking at that. This, from here to here, should repeat itself from the 50% retracement level. Where we're at. Okay, and that's what it should do. And this, if you look at the 50% retracement level, that's what I was talking about right there. Okay. Alright, thanks Wayne. So we're still in the trade right now, so far. Here it is. Okay. And we'll just have to wait and see. I don't know, what did we end up with there? It just went to plus 10. Okay, it just went to plus 10. Alright, I was trying to get a little more out of it. But we're out of the trade now. And let's go see if I got that extra 4 ticks. I did not. Alright, so we ended up with 10 more. So that puts us at 10. And that's now a 5. Okay. But you see what I was looking for here, right? And it gave a purple. So, got all kinds of reasons to go down right here. So the fact the blue shot above the red does not matter. Well, that happened after the fact. This is where the trade, right here is where the trade triggered. Right, I think that's where the trade triggered. Yeah, that's where I got into it, right in here, somewhere. In hindsight, that does not look like it was a valid trade at all, but it was. And how did I stay in that? That doesn't even look like it makes sense, does it? Alright, well, either way. This was actually a trade right here, too. I should have been long right there. Well, that was all within that other trade that happened. So So right now what I'm looking for is another shorting opportunity. Alright. I don't know that it's going to happen. It's going to take a couple of bars for it to happen. But we don't have anything over here on the ES. Now I can probably bump the ES down to something smaller. So we have some trades over there. Or I can put it on a different market. Try the Russell. The YM was just difficult today. But let me put the Russell on. I have a 19 range Russell Tom going already, so I can use that instead of the ES. Okay. And let me move my ES Dom out of the way. Alright, does anybody have any questions? I find myself in the odd place where I have time to just answer questions. This right here was Synthetic Divergence, long on the Russell. The entry point should have been right here at 32.1. Okay, this is still working its way down. It's going to get all the way down here is what I'm thinking it's going to do. Right here, we didn't get any kind of a cross of anything right there, so we're not going to have a trade there. Okay. If you haven't taken a free trial and you want to, go here to tvifortrades.ai. Just right there. This video, the recording of this will be here. Does that look 3D to you? I don't know what it looks like on your screen. It probably doesn't look so 3D to you. But it's supposed to be 3D, and I don't know if it's just these glasses, because it does look 3D to me somehow. Looks like this is in the foreground and that's set back. I don't know. Anyway, the Russell is starting to move now. I got into the Russell, I just got in really late on it. Here. Like 10 ticks late. That's 11 ticks right there. I don't know what that is. 17, 18. If I can drop it at 2, that will be 20. But I can't drop it yet. The yellow's got to get up above it for me to be able to drop it. There it is. It's 20. $22. $25. It's actually got a short right here, so I'm gonna lock in. That was 29. Alright, because it's actually got a short right here. It just triggered a short trade from right here. So you could reverse it. That's what you were saying, Kurt. You could reverse it right here. Reverse and cancel. So we got 29 on the long, and now we'll see what we get on the short, because this was a Synthetic Divergence short trade right in here. This is nothing here on the NQ. So that was a Russell 29 long. Now the Russell on the 19 range has a 25 tick stop. Okay. Just so you know. And after 10 ticks in profit, the stop goes to +5 after 10 ticks in profit. Okay. So it is now 3:30. So at this point, I feel compelled to go and see how many of these things are still in play. Okay, because the list that I gave out earlier, on Wednesdays, it's kind of tough for me on Wednesdays because I'm doing this every Wednesday. But, you gotta manage this too. Once it goes to 10 ticks in profit, it's gonna bump it to +5. It's gonna go one more tick. It was so close. Alright, let's leave it right there. Now, in the option channel, what I had said for tomorrow in the option channel, I go down to the bottom. Come on, man, get all the way down to the bottom. Okay. Here's what I had in the option channel. Try to scroll all the way down there. There you go. These are the guys that I was looking at. So HPE. HPE is still in the mix. Bax is still in there. Amazon is still in there. Johnson & Johnson, target, still in there. It added pan W. Okay, we're at +5 on that now. Alright, we're out with 5 on the Russell. It added pan W. Verizon is in there, Johnson & Johnson. UNH, is that in there? No, it's not. So UNH, pan W. Let me write those down. UNH is a put. Pan W is a call. So I'll have to go check those out and see what we end up with on those. Alright, so we got 5 ticks in profit on that Russell trade. So we'll go back here now and add 5 more onto that. That becomes 34. And this becomes 7. Okay. It did not give a counter trade right here. Right? We didn't end up with another trade here yet. We didn't end up with another trade there yet. But we're able to take the long trade with 29 ticks and the short trade for 5 ticks. And over here we took the short trade in there, I think. I don't remember what we took exactly over there. On the ES we took the 1 trade for 12 ticks. Okay. The white and purple, Paul, they're used for the mid bands. If you're using the white and purple in here, the question was, what are the white and purple bars for in here? There's the white ones. This puts on the white ones right here, okay? This shows the mid bands, and if you have the mid bands turned on, the purple ones come with it. Now, if you're going to do those, that means you're doing things with the trend. So if you're going to be playing with the bar colors like that, you should probably just shut off all these other things. So you're just dealing with the bar colors and the mid bands. Okay. So remove that right now. So you're just dealing with the bar colors and the mid bands. If the mid band is red and you get a straddle of the mid band like this, then you would sell it at the open of the next bar. Straddle the mid band, closes down at the bottom, you sell the open of the next bar. Straddle the mid band, close at the bottom, you sell the open of the next bar. You get a white one if the mid band is red and you have a white bar that is fully above the mid band but below the upper band, then that's going to give you a white. Okay, and that should go down to the outer band. That's what it should do. Now, as the band colors change and it switches directions, then you're looking for the up close above the mid band. Okay, the up close above the mid band. That's what the purple and white mean. Okay. Nothing popped up for that. Well, I'll give it to you right now, Jimmy. Hang on. I gotta go to the right one. You can probably highlight just the link on it. If I click on that. It's not that. It's this. Copy. There. Alright. Is the option scan supposed to be... No, it's not going to be in your indicator list, Hal. I'm the only one who has it in the indicator list. It's just too many things. You know, in the indicator list, the option scanner is all those 4 and all those 4. And that's just the beginning. There's a whole bunch of other stuff that's going in too, because I got the 0DTE stuff. So that's even different. The zero, and yeah, I kind of grouped the 0DTE into one thing right here, the 0DTE scanner, because that really looks at just a limited list of things. But I have the 0DTE scanner on 5 different time frames. So it just becomes too much for you guys to manage, for me to try to explain to you to manage, because it's a lot for me to manage all by myself. And I created this stuff. So, but that link, I'll stick it out in the options channel again. That link, it doesn't have any text on it now. I'm going to pin it again. Let me unpin the other one and pin that one. Okay, unpin that one and then pin this one in the options channel. Pin. Okay, would I like to pin that? Let's say pin. Alright, so now when you click on it, click on that link, it should bring up this right here. Okay, and those are all the options that we're looking at right now for tomorrow. Okay, so you guys, at the end of the day, you should go and check that out, and then compare it to your range trigger and see if you get the cross with the things, at least the things in the top, see if you get the cross. Okay. And that's it. Alright. What time is it now? 3:33. Alright, well this has gone pretty well. Better than I thought. I mean, I was afraid I was going to be trying to do so much I wasn't going to get anything done. But I'm not trading like a maniac and all that. So we could have a trade here on this arrow, I mean on this bar. Now it's not a blue one because the blue one would be on the up close, but it could be a black one on the down close right now. Okay, the blue ones are going to be on the up close, not the down close. Just a reminder to you. Let me put those back on in here, by the way, since that's what we're trying to come and look at. Make sure I have them on over here too. I do. Okay, good. I just remembered something else. It's Wednesday. That link work now, Jimmy? That get you where you wanted to go? Okay, so on the Russell right now, we have a blue arrow right there, short. So here it is, short on the blue arrow. And we don't have anything over here yet on the on the NQ. Not yet, anyway. So we'll see how things go. I think I got a pretty good entry on this one, right? 38.8 and 39.2. That's even better. 4 ticks better on that one. I don't normally get better entries. I normally get worse entries. Alright, so we ended up with nothing else over here. Now, it didn't go through anything on the way down to the oversold, so you don't have a trade on the upside on this at all. Okay. And this one, again, after 10 ticks in profit, it's going to go to +5. So it's going to get down to right there. And if I look through the DOM, nothing's really jumping out at me on either side in the DOM. So this right here, 76 down to 36.4. That's the biggest number I see. And where is that? 36.4 is right here. So it should get there. Should probably get there. Alright, no trade here. Okay, no trade on the long side. Can I please explain the blue arrow? Did you just get in, Anjum? That's the thing with having an hour-and-a-half webinar. We'll drop in at all times. So I explained the blue arrows right at the beginning. I explained it again a half an hour in. And so here, now, an hour in. Now the blue arrows, let me just show you what it looks like compared to the other arrows, okay? There it is. Alright, so every blue arrow is also a gray arrow. If I took the blue arrows off in here. Well, okay, I guess I took the gray arrow out. But every blue arrow is also a gray arrow. If I just had the gray arrows on without the blue arrows. But what it is, it usually happens before a black arrow, so you get in at the beginning of the black arrow bar instead of at the end of a black arrow bar. Right, like this right here. Now, Angel, you really want to see the blue arrows be outside the bands, kind of like the black arrows. You want them to operate the same as the black arrows. Like this one right here is completely outside the bands, so you want to take that short, and I am short on that, waiting for it to get to 10 ticks in profit, where bump my stop to +5. And this was a synthetic divergence trade that I took in there. It doesn't look like it right now, but it was when I did it. And this was a black arrow trade right here that I didn't just do, that we could have just done, but I wasn't looking at that either. And my stop would have gone to plus something on that if I'd have done it on the 36 range. I'd have gotten plus 10 on that at this point. Okay, now my stop on this over here is 25 ticks on the Russell. On the 19 range, it's a 25 tick stop. So on the day so far on the Russell, we are at, or in this session on the Russell, we're at plus 34 ticks. 34 on the Russell, 10 on the NQ, and 12 on the ES. Is where we're at in this session so far. Now, that is not a trade right there. That is not a short trade right there. You see how the blue, you see right here how the blue didn't make it out of the cover right there? It didn't make it out of the blue background. That's not a short. It's got to get it to the edge of the background or out of the background, and that's not at the edge and it's not out of it. So that's not a short on the up close right here. Okay. And we didn't cross the step line on the way down right here. It's not all the way down for one thing, and it didn't cross the step line either, so it's not a long trade either. Okay. And still waiting for this Russell to come together. Okay, yeah, you can see it all in the replay too, Engine, but that's in a nutshell. You treat it just like a black arrow. It's going to give you an entry at the bottom of the bar instead of the top of the bar. Okay. So I went through all those things. Now, bring this up. Let me bring it up over here. You guys remember that shovel I ordered in January when it snowed? I still don't have it. Can't believe that's an Amazon thing too. Let's see, there's something to the black line that I created in there, the derived value of the synthetic divergence. We're about to stop out on this. And there it is. We did stop out. Alright, so let's bring this down. Let me put the stop out in. That brings this down to 9. And this to 8. And this to 2. Okay. So we're now up 2450 on the session. There were no trades in there. No trades in here either. And Bart. And Nasdaq long. Excellent. 1529. On 100 range. Or right here, off the mid-band. Are you in here right now, Robert? Are you watching in here? You are in here. Okay. I see. Alright, is this a trade here? That's not a trade there. Ah, I see what you mean. Down in there. Yes, there's a lot of stuff that I'm working on right now that is going to be really useful, I think, in the future. And I'm just going to keep making things better. You know, try to make it less instead of more. That's what I was saying earlier, you know, if you're just doing the synthetic divergence, just do the synthetic divergence. Just shut everything else off and do the synthetic divergence. There's plenty of money in that all by itself. Ah, yes, you're talking about this right here. Yes, there is something to be said for that too. That was that stuff that Jim had seen. He was using things like that, Robert, where you get the red goes way into the overbought, way into the oversold. And basically it was when I changed it around a little bit, so if the blue's already way into the overbought or oversold, then the red joins it. That's where you get one of these little red arrows. and those work out pretty well too. But again, I don't want to distract you guys by all the potential type of things there are, because I mean, I know it's just your nature is people who are trading discretionally, and using tools like this to say, well, what happens if I do this, and what happens if I do that, and you find your comfort zone, something that works well enough for you all the time. I'm going to give you a path. I'll give you a roadmap, and you can follow it. It works for me. You can change it to whatever is more comfortable for you. Like the stuff that I do in the morning where I'm really aggressive with my risk management, that doesn't suit a lot of people. Most people can't do it to begin with, and a lot of people don't want to do it, and I get it. I created the stuff so it's kind of easier for me to see, to expect what's going to happen next. Get a feel for what should happen and when a trade should trigger before it actually does. Yeah, I wish I could. I wish I could. I try to tell you. I try to say, okay, so we need 2 up closes and a down close for this to become a trade. I'll tell you ahead of time what the bar sequence has to be. I can do that better in the morning than now, because right now I don't know whether we need the cross or not. If we're not dealing with the cross, then it's easier for me to do it. But so right here we just had a whole bunch of movement here, but none of it gave the right indication. Yes, the line has to be in the light blue. Yep. Yeah, that's called the cover. If you look in here on the front page, in the front thing. Sorry, right here. I think it's over here. Wherever it is. Background color cover. It's right here. The cover. So you can make it as dark as you want, or as light as you want. You can change the color of it altogether if you want. That was one of the first things I created way back in the beginning, when we were using a couple of different lines in here, going for a divergence between the lines, but they were created from different values. One was this blue line, but there was another line that went with a black line. And when you had either both coming out of the cover at the same time, or both being divergent within the cover, it was a big deal. Yeah, right in here. That was definitely a good trade right in there. Yeah. That's what I was saying, Robert, earlier. If you're going to trade the synthetic divergence, then you don't have to have anything else on the charts. It's probably just distract you. The fewer things you have that's going to influence your decision, the better, in my opinion. On 19 ES was just a buy and now a sell. Let's go see. It was just a buy back here, and now it's sell right there. So if you did take that 19, you had a nice profit right there, and you're in a nice profit right now. So yes. And I left that one because it wasn't giving us any trades. Went to the Russell. Since then, though, since I stopped looking at that, I guess those are the only trades I gave, that long and then that short right there. The YM was complicated today. Looks like it was still complicated. Didn't get any better. But yes, Paul, that was a good signal on the ES, long and short. Remember, you don't have to sit here and trade all day. Just get in there and make your money and get out. Now, Robert, you're looking at the divergence between these. Wait until you get the divergence between these. You know, if I just leave that one on and that one on, get rid of that one, and that one and that one. This is going to be something in the future, because that black line is derived from the synthetic divergence. And it gives some really nice indications, but I haven't worked out all the details yet. Over time. You told me I can't give you too much at once. You said it. Look, right here. That is the NQ blue arrow right there. Okay. There. Here it is. So I think I got a pretty good entry on that one. 57.50 a minute, 57 and a quarter. That is a good entry on that one. Right, so this, after goes 16, ticks into profit. It's going to bump my stop to plus 10. So it's going to get up to 61 and a quarter right now. My stop will go to plus 10. Now, when I look at this right here, right, here you just went to plus 10. Let me just take it to plus 14. There. Okay, when I look at this right here, didn't end up with a synthetic divergence to go along with it, but we did end up with 14. What I was just going to explain to you the first time I said when I look at this right here, and the second time I said I was going to explain it too, but it's actually happening right now. What I was saying is, when I look at this, what I saw was, I mean, you know, we got this leg up and then we got this leg down. But within that, we got this leg down and this leg up. So this is 50% right here. This right here was 50%. So we have a leg within a leg. Right? That's why I was thinking when it got back up here, I was wondering if it was going to make it, if it was going to go all the way through and give us the opportunity there. It actually just gave us a short here, right there. Just a second ago. But I was wondering if it was going to stop once it did a 50% retracement of this leg, because that was right about the mid-band. And it did. It stopped there and it pushed it back down. So I got my 14 ticks on the first one, and now it's pushing it back down for the second leg of it. So that puts this back at 24. And this at 9. This is not 100%. I don't know why that's saying 100%. The formula's not right. Oh, I see why. I got that in the wrong column. There we go. That's better. Well, it's not better, but it's true. Alright, oops, I didn't mean to do that. Delete on that. Go back here. What time is it? It's 3:52, so we have 8 minutes left. 8 minutes. More trades. Do we have any more trades? Let's go back and look at the ES really quick. Did we get anything else on the ES, Paul? Nope, not quite. Not quite. Alright, just going through everybody who's in here today. Pretty good group of people. That's good. Remember, I'm not going to be here next week. We're not going to have a meeting next week. No meeting on Wednesday next week. I had thought about trying to squeeze a second one in this week, but I just don't think I'm going to be able to do it. Cliff, is Cliff in here? Cliff, you are in here. Hey, that's good. Sorry we didn't get to meet yesterday. Maybe tomorrow. I'll try and get you set up before I go. I had my window yesterday. That long on a blue bar on NQ is not outside the band. You know what? I didn't even realize I saw that. Thank you for pointing that out, Scott. I didn't even realize I did that. Right. Well, the one thing I did say earlier, though, if it's just a little bit inside the band, the blue arrow, a little bit inside the band, it's okay. I was trying to program it before I got here to allow it to show up, or to not make it show up if it got too far inside the band. I'm gonna work on that, though. I did say that earlier, though. I don't know if you heard me. I said, the blue can touch the band. It can be a little bit in the band. It's not like the black in that sense. The black I want to be completely outside the band. But I wasn't really paying that much attention to it, to be honest. It could have been right here in the middle, and I probably would have still taken it. Like that one right there, that's a short. That is a short. There it is. This could be our last trade. I don't know. Looks like it's going to be quick at stopping me out if it's gonna. Now, the retracement of that should put it down to here. Okay, nope, it just stopped me right out. The retracement of that should put me down to here. It should still go down, right? Even though it just stopped me out, it should still go down. And that was the NQ, so we're going to end up negative right now on the NQ. This is a 10. That's a 3. And that one didn't go in my favor at all. Okay. And the black is getting the indication that it should probably not go. And you wouldn't normally have that there. Okay, that's being created from something else. Alright, so now we wait. Wait just a little bit longer. It's 3:56. Where are we on the totals right now? 1,350. That last stop up kind of hurt. But we could have another trade here. We'll see. I should have one more anyway, I imagine. Alright, so nobody has any questions at this point. If you want to put the blue arrow on, you have to refresh your chart. Alright, just hit that refresh button up there. Then you may get a little purple thing on your swing bands. Click on that. It'll update it for you. Or you can just remove your swing bands and put on the fresh one. Okay, you don't have to change anything. Just shut it off like that. Go in. Put a new one on. Right, you don't have to adjust any settings or anything like that. Well, I did have the mid bands on. And that's it. 2.5 minutes. I'm hoping we'll have one more trade here because we're actually below the average that we've been getting. We've been averaging about $4 grand. Yeah. It's going to bring the average down today. So the last few of them, it brought the average down. Go back and see what I was doing on those days. those big days. All those are available, you know. If you want to go back and see any of these webinars that I've done, just look at the date. And if you look at the date and you go here, go to the playlist, you can just go find that date in the playlist. Right. I guess these are probably sorted by date. Right, and it'll be in there somewhere. Alright, so no trades right now. We only have a minute and a half left. We may end it this way. It ended on a stop out like that, but, well, it happens. And I have to remember all the other things I need to do right at 4 o'clock. So it's possible the Russell could give us a blue arrow short here. Not likely though. I was going to tell you guys the thing that gives you the blue arrow. It's when you get an up close like that, and it comes, the synthetic divergence goes opposite to the bar close, but it's coming out of the overbought. Okay. So for this to be a blue arrow, it would have to close up and this would have to go down to have a blue arrow right here. We'd have to have an up close with this going down. Okay. And it's just about 4 o'clock. It is 4 o'clock. So I guess we're going to wrap it up. Disconnected. Let's go see one other thing here really quick. In here. I want to see how these ended up being. Before we totally wrap it up, I had said the new ones were UNH and PanW. Are they still in there? USB is in there now. PanW is in there. UNH is gone. UNH is there. Okay, so I'm just going to stick with the list I already have out there for right now. Alright, there's a couple in there if you guys want to go and figure out if they qualify. The PanW is one that I didn't look at. UNH, I didn't look at UNH, I didn't look at PanW. If you want to go check them out and see if they qualify. I mean, we can do it really quick, I guess. Go here. Do PanW. Now, it's too late to buy the options now, but in the morning you could see PanW is no good, and UNH. UNH is no good. So neither one of those are any good. So we'll just stick with the list that I had earlier. And here we are now. We have actually potential longs on both the Russell and the NQ. We have the blue arrow long here, and we had the synthetic divergence long right here on both of those. So I don't know. I'm just going to call it right now. We'll just wrap it up and call it right now. This is how we're going to end this session. 10 trades with 3 stop outs, so 70% of our trades are break even or better. We're up $1,350 on the session. We were minus 12 on the NQ, plus 9 on the Russell, and plus 12 on the ES total. Alright, so on the overall, the 44 sessions that I've done that I've kept track of, there were a few there that I didn't keep track of. Well, I kept track of them, but I didn't count the number of trades, so I can't take account for any of it. But since I started keeping track of it all, we're up $190,550 in these sessions, averaging 4,330 per session with 10 contracts, or 433 with 1 contract, or 43 with 1 micro, $43 with 1 micro. The sessions pay for themselves times 2 just about every session. If you do the 1 contract, with the micro I mean, if you do the 1 contract, obviously it pays for itself 6 months at a time, every session. And if you're doing 10 contracts, well, you'd be paying for years at a time. But anyway, if you haven't taken a free trial, go here to tv-trades.ai. Just sign up there, click on the thing that brings you down to the bottom, and sign up for the free trial. And soon, this options page, tvtoptions.ai, I'll be filling that up with information for you guys to have access to. This will not have that link that I gave you guys earlier that gets you to this page. This link that gets you to that page. That link is only going to go into the Telegram channel because I'm going to change that link probably weekly. Alright, so it'll be in the Telegram channel. It'll be pinned at the top of the Telegram channel. Okay, so these are the signals that I'm using for the options. Alright, if it's green all the way across, that means it's with the trend. If it's red all the way across, that means it's with the trend. These are also signals. They meet the basic requirement, but you got to go and check and see if they have the cross or not. Alright, now the new one that I created, the newer one that I created, that uses this level here, the TVT scanners from 5, 6, 7, and 8, those scanners, they don't need to be checked. Those are all good to go. You know, like this HPE. That doesn't need to be checked. Now that doesn't meet the requirement for this, but it does meet the requirement for this, so that's still a trade. Okay. Anyway, it's all a bunch of information for you, and it's all available to you, and that's it. That's how we're going to wrap it up. Alright, is there a chart that shows option prices throughout the day? Option prices? Individual prices on individual options? You'd have to go and check that out at your broker, Paul. But that one thing that I just showed you, that link that is in Telegram, this one right here, that's in Telegram, that shows what's going on, and you have access to that, so you can click on that anytime during the day. Okay, and it'll bring up that chart that I just had up, this one, or something like this one, this one, this one. One of these. It'll bring it up. This is the 0DT one that I had showed you guys. Alright, but that's it. Alright guys, let me shut off the recording here.